out after Powell, whether they're cleaning up or clarifying, however you want to call it, the market's like, yeah, thanks, but, and they just keep going. And we had the UK inflation data that was soft. So more you get this feeling of disinflation, the market, I mean, we knew we were at an inflection point anyway. I just think we're going to have data move the market to slow down. Like Abigail's saying, kind of, we're not going to have a straight line in bonds either. Like she's talking about stocks, we're up or down today. But I just think, to really crack this momentum, to pull a bunch of this easing out, it's going to take a lot. And I just don't, well, we have Friday, we have, PCE deflator, right? Let's see if that's a surprise.
Yeah, Liz, that was going to be my next question. Is there a data point on the horizon this week between Christmas and New Year's, or not until January, that really could shift the narrative in any way?
Yeah, well, all the forecasters, there's different data points that feed into PCE. So everyone's saying what we got from CPI and other numbers means this PCE number, if you look on our eco page, is going to be down, core PCE and, the outright one. So, I mean, that's what the market's expecting. So if by chance somehow there's a surprise and it's much stronger than expected, that may slow the heels here. But like you said, it's a Friday, pre-Christmas time trading. Liquidity is thin, which is kind of a headache for me, which means the markets might move a lot, even though, it's only a few traders. But I think that's what you're going to need to see. If this number comes in weaker or even on point, it just kind of leaves the floodgates open for lower yields. I mean, that's great for like 60-40's done really well this year. People looking at their retirement accounts are happy after being miserable in 2022. But I just think we're just going to keep kind of biased towards any pull up, rebound in yields is going to keep going the other way unless the data just really smacks us in the face.
Abigail, what's interesting? I'm looking at one of the functions on the Bloomberg terminal that tells us, when certain equities or indices were at this level. We're actually back to December 13th levels on the S&P 500. The reason that's notable is because that was the day that we heard from Fed Chair Jay Powell.
That's really interesting because I'm seeing that in chart form. We've basically done a round trip. I didn't realize that it was to that day. So investors priced in that Powell pivot. Well, some investors priced it in. I certainly did not think he was going to pivot that way.
Yeah, you and me both.
Maybe it's
because we sit by each other. I don't know.
Maybe that osmosis, that that brain power osmosis.
I wish it worked like that because I would love to learn everything that you're able to do on the chart.
And right back at you in terms of everything that you're able to do. But I think that we're going to see a reversal actually to not just we're at where we were after Powell, but now the question is, it looks like we could reverse to where we were before Powell, which would essentially be, looking at the chart here, 46.18. So we could give up another 100 points pretty quickly on the S&P 500. Does that happen today? It's hard to say. It could possibly. You never know in the last 30 minutes or 10 minutes of trading. Could it happen this week? Absolutely. And to Liz's point on PCE, if that number is somehow just even slightly hotter because of fewer traders, it could really send markets just a little bit haywire. And I think we just have to really remember the year-end, quote-unquote, window dressing, profit-taking. I think that that's definitely a big piece of this.
And Liz, to get back to the bond story, what should we be keeping an eye on, maybe from a fundamental standpoint, maybe from a trading standpoint, as we do work through the final, 8 days of the year when people are likely going to be off the desk? I'm just looking at the 10-year right now at the lowest since July 27th, and even on a 12-month basis, that is really pretty much, for the most part, down and to the right since October.
Yeah, and I was just thinking too about, which Abigail brought up, about like returns. Like, remember how terrible the bond market was. It was down everywhere you looked on the Bloomberg indices page. It was red ink on fixed income. Now we're all up, not a ton, but up. I mean, some like high yield and stuff, but treasuries are up several percentage points. So I think that's going to bode for even more people trying to say, oh my God, I got out of this year with a return. Let's keep it close to the vest and not do too much. But where I'm looking forward is there's a lot of focus on, despite, not just directionally, but the yield curve. And that it's not always doing it lately, but steepen into next year. Number one, a classic Fed easing, you would see steepening with rates going down, but there are still people who haven't forgot about the risks in the long end of more supply, fiscal deficits staying stickily high, things like that make people say, I kind of want to kind of lean into the middle of the curve. Maybe I'm hoping sometime next year we get to write that story that the curve is positive sloping again. So that's what a lot of these, bigger wagers are on, yield curve steepening into a positive slope next year sometime.
Well, a good reminder that stocks and bonds don't just go one way, even though that's kind of been the story over the last 6 or 7 weeks. A big thank you to both of our guests, Liz McCormick, Chief Correspondent for Global Macro Markets, joining us on Zoom from New Jersey, and Abigail Doolittle, Markets Reporter for Bloomberg News, here in the Bloomberg Interactive Broker Studio. Tim Stanovic and Bailey Lipschultz, we're just getting started on this Wednesday.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:20 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. This update brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Stocks now lower across the board. S&P 500 index down 41 points. That is a drop of 0.9%. The Dow midday reversal down 250, drop there of 0.7%. Nasdaq Composite Index down 134, drop there of 0.9%. 10-year yield 3.86% with a 2-year that's yielding 4.36%, and spot gold right now lower by 0.3% at $2,033 the ounce on spot gold. West Texas Intermediate crude is also trading higher today. WTI a little changed, up 0.1%, 74.03 a barrel. Well, what about the market backdrop? Frances Donald is Global Chief Economist at Manulife Investment Management, and she was interviewed this morning on surveillance.
I think it's all semantics. We are in a global easing cycle. They can tell us they're not talking about it, but then we're talking about how they're not talking about it. Emerging markets are cutting. Every single day I get a new emerging market that's cutting. They led the cycle on the way up in rates. They are leading on the way down. Every morning I wake up to inflation prints that are surprising to the downside.
And you can hear more of the conversation with Frances Donald about the Fed on the Surveillance podcast. A U.S. auction for drilling rights in the Gulf of Mexico raised $382 million from oil giants before the Biden administration imposes a 2-year hiatus for future sales. Today's top auction winners, Hess, Anadarko, and Shell. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really do appreciate it. Tim Stenevec and Bailey Lipschultz live in the Bloomberg Interactive Brokers studio. Well, you saw the alerts last night. Donald Trump ineligible to serve as U.S. president because of his actions inciting the January 6th, 2021 attack on the U.S. Capitol. That's Colorado's highest court's finding. This is an unprecedented ruling that's headed for the U.S. Supreme Court, no doubt. Here's what happened. Colorado's Supreme Court issued this ruling late Tuesday, which barred Trump from the state's March 5th primary ballot, but stayed the decision to allow the former president to appeal, which his campaign said he plans to do. He has until January 4th, by the way, under the state's court ruling. It's a legal story, but it's also a political story with wide-ranging implications for both politics and legal stuff. For the legal side, we turn to June Grasso. She's Bloomberg News legal analyst and host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. To find out all the legal stuff, you just listen to June. For the political side, we turn to Jody Schneider, political news director at Bloomberg Television and Radio. She joins us from our Washington, D.C. bureau. Jody, I want to start with you to get the politics side of this. What's the sort of day two here with the other Republicans and with what Trump is saying about this ruling?
Yeah, it's not a terrible surprise from the former president is basically saying that this is something that has been concocted to try to keep him out of the race and blames Democrats. What's more interesting to me is that the other candidates in the race, people who are running against him for the Republican nomination, they're singing that same tune. And they're saying they would rather win at the ballot box than via the courts. So the Republicans, including Republicans in the House, have really been standing with Trump in this.
And Jody, I'm just looking through Bloomberg News Morning Consult poll from last week had Trump leading Biden by 5 percentage points among registered voters in head-to-head matchups across 7 swing states. Colorado had voted for Hillary Clinton and Joe Biden the last 2 elections. But when you look at this decision, what can it mean for the presidential election given those polls?
Well, the polls it's still early. And a lot of people are focused on the polls about the primaries. The general is still 11 months away. So there's 2 ways to look at this. If Trump wins, and he may well at the Supreme Court, he nominated and got several of those people on the Supreme Court who are now serving, that he will get some, credence with Republican voters. But where he really needs to win is in those 7 swing states. And it will be hard for him to win with just the Republican base. And how does this look to some of those independent voters?
June Grasso, come on in here, legal analyst for Bloomberg News, host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. What did the Colorado Supreme Court decide here?
So the Colorado Supreme Court decided that, and this has been sort of a legal debate that was started by some conservative scholars, actually, whether or not under Section 3 of the 14th Amendment, which was passed around after the Confederacy to prevent Confederates from getting into taking office, whether the language in it, there was a couple of problems. Always a couple of problems. First of all, it doesn't talk about what an insurrection is. It doesn't say what it means to engage in an insurrection. So that's a question that's open. And also what it says, the language is that officers of the United States who take an oath to support the Constitution, it mentions some officers, it doesn't mention the president. So that's another question. Does it apply to the president? So in this case, the lower court found that, yes, there was an insurrection. Yes, Donald Trump incited that insurrection, but found that Donald Trump was not, that the presidency was not one of the offices that you could, that take place, or that one of the offices that Section 3 of the 14th Amendment applies to. The Colorado Supreme Court said, yes, there was an insurrection. Yes, Donald Trump incited it, but the 14th Amendment, Section 3, does apply to presidents. And if you look at the history, it makes sense that it would apply to presidents, because someone said to me, well, you know, Jefferson Davis, does that mean that he could have run for president because the 14th Amendment didn't apply to him? So it sort of makes sense historically.
So what's the legal route that President Trump could take now in order to get back on the ballot?
The Supreme Court is the only route. I mean, this is a question.
He can't appeal the Colorado Supreme Court decision at the level of the Colorado Supreme Court.
No, that's the highest court in Colorado. So the next, it's not like New York where we have the Supreme Court is the middle court. He has to go to the Supreme Court. And, you know, the justices here on the Colorado Supreme Court knew what was going to happen because they gave him enough time to appeal to the Supreme Court. And also the language in this more than 200-page opinion was full of terms about how they know how significant this is. They know it's unprecedented. And, you know, it's going to be in the Supreme Court's hands whether or not to take the case, which most people I've spoken to say, there's really almost no choice. The Supreme Court has to take the case because, you know, otherwise what will happen in different states across the country are going to have some states like Minnesota, the Supreme Court there said, no, this doesn't apply. Any party member, any party can put whoever they want on the primary ballot. So what's going to happen with the primaries? What's going to happen with the election itself? So I think that, you know, all bets are the Supreme Court will take the case.
And Jody, you mentioned this about the GOP and candidates that Trump is running against standing with him. Is there a route that this would play into his hands in any way?
Well, I think certainly the former president is very good at taking things that happen outside the political arena, for instance, in the courts and with his indictments and charges, and turning it into part of his narrative. And the narrative is the Democrats are afraid of him and they don't want him to be the candidate. And some in his own party don't want him to be the candidate because he could win, and they know that. And he will certainly make this case, or try to make this case with this as well. Again, because this is the narrative that they are against me, they're victimizing me, they are using the judicial system where they control it to try to get at me. And in this case, he will probably, he has working with him in terms of trying to make that argument, the fact that all of the members of the Colorado Supreme Court were appointed by Democratic governors.
And
so,
however,
so he will make it political, even if it is not entirely political. He will not make it about January 6th entirely. And that is something, interestingly, we haven't heard a lot from, and those supporting him on this, the Republicans who were supporting him, saying this is about not using the courts to decide who gets on the ballot. They haven't said a whole lot about the insurrectionist claims.
And just to following up on that point, yes, he will say that it's all political, and yes, the justices were all Democratic appointed, but it was a 4-3 decision. So 3 of those justices, including the Chief Justice of the Colorado Supreme Court, voted against using the 14th Amendment.
And June, we only have about 40 seconds here. State courts, correct me if I'm wrong, Minnesota and Michigan ruled against similar lawsuits. What could this mean for other lawsuits from different states wanting to remove Trump from the ballot?
So they would each go their own way, but the Supreme Court will decide whether the 14th Amendment applies. But this is under Colorado law, so that's sort of a question of law that I cannot answer in 40 seconds.
All right. Well, we appreciate you trying. Thank you so much. A big thank you to June Grasso. She is Bloomberg News legal analyst and host of Bloomberg Law, weeknights at 10 p.m. Wall Street time on Bloomberg Radio. And also a huge thank you to Jody Schneider, political news director at Bloomberg Television and Radio. She's now based in our Washington, D.C. bureau, where she joined us from this afternoon. Hey, just a quick update on what the equity markets are doing as we see this sell-off continuing. The S&P 500 now down 1.16%. The NASDAQ down 1.23%. And the Dow Jones down just over 0.9%. You are listening and watching Bloomberg Business Week. Tim Stenbeck and Bailey Lipschultz in for Carol Master this afternoon. Let's now get a check on the latest world and national news. For that, we stay in Washington, D.C. in the Bloomberg 99.1 newsroom and go to Scott Carr. Good afternoon, Scott.
Good afternoon. New polling is showing President Joe Biden and Republican frontrunner Donald Trump in a dead heat in the race for the White House, while third-party candidate Robert F. Kennedy Jr. pulled away significant support for both men. A Quinnipiac poll out today showed in a head-to-head matchup, 47% of respondents supporting Biden, 46% supporting Trump. In a three-way race, Kennedy garnered 22% of support, while Biden's support fell to 38%, Trump's to 36%. Reactions are coming to Colorado's Supreme Court decision to refuse a place on that state's presidential primary ballot next year for Donald Trump, whom a party line majority said he did violate the Constitution's 14th Amendment by acting as an insurrectionist and encouraging the deadly 2021 attack on the U.S. Capitol. In Wisconsin today, President Biden said as to whether Trump actually violated the 14th Amendment, he let the courts make that decision, but that there's no doubt Trump encouraged the attack on the Capitol that took the lives of 5 people.
You saw it all. Now, whether the 14th Amendment applies, I'll let the court make that decision. But he certainly supported an insurrection. There's no question about it. None. Zero. And he seems to be doubling down on about everything.
Well, Florida Governor Ron DeSantis blasted the partisan decision, pointing out the legal process in Colorado didn't provide a trial on the matter.
Look, if somebody's convicted or something of some of these things, there was no trial on any of this. They basically just said, what, you can't be on the ballot? I mean, how does that work?
Trump's campaign has said today it does plan to appeal the decision to the Supreme Court. And Alabama Senator Tommy Tuberville's hold on military promotions is now officially over. The Senate confirmed 11 top military nominees. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. A midday fade. The Dow, the S&P, NASDAQ deep in the red. And we are trading at the worst level of the day. We've got 20 minutes to go ahead of the closing bell, right to the numbers, because we got fast-moving markets to the downside. S&P's dropped 55 points now at 4712, drop there of 1.2%. The Dow coming off of a record down 359, down now by 1%. NASDAQ down 183, drop there of 1.3%. The NASDAQ 100 index also retreating from a record, down 217 points, a drop there of 1.3%. 10-year yield 3.85%, with a 2-year that's now yielding 4.38%. Treasuries held on to gains. Stocks reverse course as traders measure the chances of a soft landing for the U.S. economy. Spot gold down $7 the ounce to $2,032, a drop there of 0.4%. And West Texas Intermediate crude now lower by 0.1%, $73.87 a barrel. Bitcoin, though, up 2.8%. Bitcoin now at 43,681. So again, recapping, a sell-off underway. S&P's down 53, a drop of 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
We're seeing a little bit of a sell-off, as you just heard from Charlie Pellet, down 1.1% on the S&P 500, the NASDAQ down 1.2%, the Dow down 0.9%. Late day sell-off here. We are just under 18 minutes from the close of trading on this Wednesday afternoon. Let's get to Alan Zafran. He's the founding partner and co-CEO at IEQ Capital. He joins us on Zoom from Foster City, California for our Drive to the Close. Alan, it's been a bit of time since we spoke to you. How are you?
I'm doing just great. Tim and Bailey, thanks for having me on your show today.
Well, thanks so much for joining us. Hey, I know a lot of your focus is alternatives, privates, real estate, but I do want to get your thoughts on the equity rally that we've seen since October 27th. Look, today notwithstanding, we're still up about 15% since then. Is this warranted?
Well, it's warranted if you think we're going to get this proverbial soft landing. I would tell you we remain a bit guarded or cautious. If you look, the entirety of the move is based on the fact that the Fed is going to be cutting rates next year. And what's different is the Fed has told you they're going to cut rates 3 times, 25 basis points each. The market's built in an expectation they're going to cut rates 6 times by 1.5%. That might be a little bit too ahead of itself. So our view is it's difficult to grow profits at 12% for 2 consecutive years in an environment where there's still a lot of challenges in the economy. We are a bit skeptical that earnings will grow quite as much as the markets have forecast. So we think this overbought rally is a bit ahead of itself.
How much ahead of itself?
You know, let's talk about valuations. You get to somewhere around maybe 5 to 10% ahead of itself, not 20 or 30. The market's trading right now at just under 19.5 times forecasted earnings. If you look in the last 20 years, the market has traded a little less than 19 times forward earnings. If you look over 25 years, the market's traded about 17 times forward earnings. So the market's probably a little bit ahead of itself with full anticipation that rate hikes are over, cuts are coming, but there's probably a bit too much near-term enthusiasm, albeit the long-term constructive view on the American economy remains the same. Equities are part of a well-diversified portfolio, and you can't deny that. You still need to have some equity exposure.
And Alan, with that in mind, what derails this? Is it the fact that the Fed may not provide double the cuts? Is it a recession? Is it inflation being more stubborn than people were expecting? What drives that?
What drives it is both directions. The Fed is trying to thread the needle. So on the one hand, you want inflation to work its way softly down without mitigating complete denial of economic growth. On the other hand, you just don't want a recession. So what we need to see in particular is that wage costs as well as input costs come down enough that companies can actually generate profit margins. And yet at the same token, the speed at which consumers spend needs to still maintain some constancy. What we're seeing is credit card defaults are starting to creep up a bit. There's a concern that if unemployment rates begin to move up, that'll in fact take away from consumer spending, which is 70% of the economy, and therefore earnings won't be quite as robust as one might imagine. The art of threading the needle is, can companies still grow earnings something next year? And multiple state these levels of rates are coming down. They probably can, but looking for another 25% up year in the S&P 500 is probably outlandishly optimistic.
Yeah, and looking at that diversification away, you mentioned equities being a part of a portfolio. High quality debt seems to be something that's very much in vogue. Where are you looking and where do you see opportunities for 2024 if we aren't going to see a continued move higher for equities?
I think it's barbelled. On the one hand, you absolutely want exposure to very high quality bonds, whether it's treasuries or investment grade municipal bonds. Yields are still very high relative to any 10-year time frame, and they're a nice diversifier under most conditions relative to risk on assets like equities. Conversely, given that short rates are so high, you can still access floating rate private credit type structures, even in the public markets through things like interval funds, which are just basically mutual funds that don't give you daily liquidity, but still allow investors to get access to floating rate debt across a wide array of companies that is yielding over 10% currently. So barbell, the middle, we're less excited about. Publicly traded day on, day off high yield bonds aren't quite as compelling because if the economy softens, typically prices of high yield bonds drop a bit, spreads widen, and right now is probably not the right time to be in that component of the bond market. But the barbell is very high quality bonds to offset risk from equities and floating rate loans, particularly more issued to private companies right now, seems to be a nice barbell around a stock portfolio.
Alan, do you think we saw the top of the 10-year when yields hit about 5%?
Yeah, we in fact believe we have found that to be the case. The reason we believe that to be the case is we believe the economy is in fact going to slow from here. We do think inflation has peaked. We do believe the Fed will inevitably have to make some rate cuts. And the easiest way to think about it is when you buy a 10-year treasury bond, it's the same as buying a 3-month treasury bill, 40 consecutive 3-month periods of time. And a 3-month treasury bill is more or less tied to the Fed funds rate. So if you think the Fed is going to lower its rates for the next year or so, and you think about where its sustainable rate is, it tells you that a 10-year yield is probably too high, or it was too high when it was at 5%. So in fact, we think now is an opportune time to have some of that exposure to longer term bonds because we think those long-term yields have peaked back in October when the 10-year hit 5%.
Well, Alan, you mentioned stability. What does a stable 10-year look like?
What does a stable 10-year yield look like?
Yeah.
A stable 10-year yield is basically what a 3-month treasury bill gives you, plus a modest premium for the fact that you're locking up your money for 10 years. So you have to work backwards. Where should a 3-month treasury bill be? It should probably be somewhere a little bit around where the long-term Fed funds neutral rate is. A Fed funds neutral rate is effectively the short-term rate that enables for 2% inflation and modest economic growth without a recession. So the Fed believes that rate is somewhere around 2 to 2.5%. So maybe a 3-month treasury bill is somewhere around 2.5 to 2.75%. You add on your premium for time, and maybe you're at a 3.5% long-term 10-year treasury yield as an aspirational place to be. We're still in an elevated inflation level. So with the 10-year trading at around 4% today, it's actually 3.86 today. We're working our way down slowly towards that 3.5%. And of course, when you buy a long-term bond, you're also getting more income historically than you do with short rates. So we would argue we're working our way towards a stable 10-year yield. We're not quite there yet.
Alan, just about 20 seconds left. Just give us some details of what you think a recession in 2024 could look like.
Well, a recession in 2024 comes from the fact that it turns out consumers have overspent all their savings in a post-COVID high. They don't spend a lot of money when we get past the holiday season. And it turns out retailers and other service providers over-anticipate how much consumption would come. They'll end up cutting jobs, which in turn further cuts consumption. And that leads to an unfortunate spiral in a recession.
Alan Zafran, happy holidays if we don't connect between now and the end of the year. Really appreciate you joining us throughout the years here on Bloomberg Business Week. Alan Zafran is founder and founding partner and co-CEO at IEQ Capital, joining us on Zoom from Foster City, California. You're listening to Bloomberg Business Week, and this is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the names reporting after the close of trading, we'll be hearing from Micron Technology. Micron has rallied more than 60% this year on bets that the maker of memory chips is through the worst of an industry downturn. Wedbush analyst Matt Bryson expects gross margins to top estimates as the company benefits from higher pricing. Micron shares, they're down now by 4.1%. Among other chip makers, NVIDIA Corp down now by 2.6%. Intel down 2%. Advanced Micro Devices lower now by 3%. FedEx shares are plunging 11.8%. FedEx reported profit that missed analyst estimates as cost cuts were not enough to make up for volume declines at the air freight unit amid a lingering cargo recession. Elaine Becker is senior research analyst at TD Cowen, and on surveillance she said headwinds for FedEx could persist.
FedEx and UPS raise rates somewhere between 5 and 7% every January. And at some point, you have to ask the question, do I really need to get my package there first thing in the morning? Can it get there in the afternoon? And to the extent the answer is yes, you see people trading down from express to ground. Right. And that's the future.
And she does have an outperform rating on FedEx with a 293 price target. Right now, FedEx 246, down 33 points, a drop of 11%. And those are some of our top company stories at this hour. And this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenevec and Bailey Lipschultz in for Carol Master this afternoon. Hey, some breaking news. This coming via Axios. Warner Brothers Discovery in talks to merge with Paramount. Sarah Fisher over at Axios. She writes, Bailey, that David Zaslav, who of course is Warner Brothers Discovery's CEO, met with Paramount Global CEO Bob Bakish yesterday in New York to discuss a possible merger. That's according to multiple sources that Axios has spoken to.
Yeah, and this is calling out that the sources say the conversation lasted several hours at the Paramount headquarters here in New York at Times Square. Tim, the thing that's interesting to me is you look at some of the franchises that could be brought together, and that's something that Axios calls out. CBS News and CNN, as well as CBS Sports, that footprint combining with potentially Turner Sports, which has TV rights for March Madness. So if they combine those efforts, that could streamline operations, maybe save some money. But looking at the stocks initially, Warner Brothers Discovery, ticker WBD, right now down almost 5% after those headlines crossed.
Really interesting moves in the equity market as a result of this Axios report, Bailey. You bring up a really good point in talking about the types of content that is called out by Sarah Fisher, because if you think about it from the perspective of, okay, what's the content that people are watching on demand using streaming services like Max or Hulu, Max, of course, owned by Warner Brothers Discovery, versus what they're watching live, right? Those sports assets that people still tune into live and news that people tune into live because, well, that's what it is. It's live. It's not that on-demand content. So if these, quote-unquote legacy media companies that start to consolidate can start to consolidate and actually, beef up a little bit to actually increase the leverage that they have over those carriage contracts, then that could be a good. I mean, look, this is a declining business.
Yeah, exactly. People are cutting corners. Do you have cable? I don't have cable. So, and I'm not someone that goes out and pays for every different streaming platform. So when you look at what some of these companies are having to deal with, some of them have large debt loads. Some of them have struggling businesses. Ad sales are not what they once were. So you do see potentially some of these mergers, and this does come after Bloomberg earlier reported that Paramount was in talks to sell BET Network. Wow. So a lot of changes.
Yeah. No doubt 2024 is going to see more consolidation when it comes to the media industry. That's a prediction that I'm comfortable making. Hey, don't go anywhere, because coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, YouTube, and Bloomberg Originals. We're going to count down to the close. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu We're counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Tim Stenovic and Bailey Lipschultz. Welcome to our audiences across all of our Bloomberg platforms on a really intriguing day in U.S. equity markets. It started with stocks trying to push higher here, extending that rally, but a big reversal a couple of hours ago that now has all the major indices down by at least 1% or more.
Yeah, we're seeing the selling continue into the late session, Romaine, with the S&P 500 at its worst levels of the day. Hey, we just spoke to Alan Zaffron over at IEQ Capital, and he said, look, I'm not surprised by this. I'm a bit guarded when it comes to this market. I think that the markets have gotten ahead of themselves. In fact, if you look at what the Fed projected, they projected 3 rate cuts, but the market is projecting 6 rate cuts next year. And, not just that, but he's also worried about a recession in the early part of next year. So he's a little contrarian to what we've seen from the equity and bond markets of late.
I just want to call out right now that we have more than 480 of the 500 components in the S&P 500 trading lower. So we've been talking up breadth the last few days, broadening away from the Magnificent Seven. Well, yields are down a number of basis points right now, and you are seeing the weakness continuing to spread more broadly, something to keep an eye on. But again, holiday season, end of the day trading, volumes are relatively stronger than maybe expected, but not too much to read into it, probably.
Yeah, and the way the volume has picked up since about 2:30 in the afternoon, when the sell-off really picked up steam, is interesting as well. It begs the question, how does this set us up for the rest of the week, especially with so many people still expecting a rally into the end of the year?
The S&P 500 had been in overbought conditions for 7 straight sessions, peaking at about 82 in Tuesday's session here. So once again, some of the technical levels probably working in favor of this downturn that we're seeing today. And with just 19 stocks in the green here on the day, this is going to be the broadest sell-off that we've seen in the broader market, going back to mid-March when we had the whole fallout from the SVB crisis. Here are your numbers for you. The S&P 500 below that 4,700 mark, a close right around 4698, down 70 points or 1.5%. The Dow Jones Industrial Average down by 475 points or 1.3%. The NASDAQ Composite is losing 225 points on the day or about 1.5%. And the big laggards are in that cyclical and small cap space. The Russell 2000 down 1.9%, S&P 400 mid caps down 1.5%, and Dow Transports, guys, down 2.4%.
Here's something that's interesting that I just found. On the S&P 500, we're now at levels that we last saw Tuesday, December 12th, Scarlett. So essentially, S&P 500 giving up all the gains that it saw in the wake of the Fed Chair Jay Powell press conference and the press release from the Federal Reserve on Wednesday.
Well, let's take a look at how the sectors are performing today. Usually we talk about the gainers. There's one group that gained, and it's barely gained, and that really is media entertainment. That's Alphabet that's keeping that group in the green. Beyond that, your outperformers are telecom stocks and energy stocks. Energy, of course, following oil prices higher, at least earlier in the day before they reversed their move. On the downside, autos and components losing more than 3.5%. Semiconductor stocks losing 2.9% as we await Micron's earnings, and the transportation names down 2.7%.
Well, speaking of Micron, perfect timing, Scarlett. Micron earnings crossing the wire right now for the fiscal first quarter. Revenue coming in at about $4.73 billion. That looks like a beat. The street on average was looking for about $4.5 billion. As for the adjusted loss per share in the quarter, that came in at 95 cents. So that's a little bit better than what the street was looking for, which had anticipated a loss of $1 per share. Cash flow in the quarter coming in at about $1.4 billion. That's also a beat versus street estimates on average of about $1.25 billion. And the operating loss also smaller than expected at $955 million. The street was looking for an operating loss on average of $1.05.
And of course, the big question here is the commentary that the company gives regarding this fiscal second quarter, the quarter right now, because last time they did speak, they indicated that pricing is certainly looking better and maybe profitability, a return to profitability is in the cards in the 6 to 12 month period.
Well, here's their forecast going forward on the revenue side for the current quarter that we're in. This is their fiscal second quarter. The company is saying that it expects to see adjusted revenue in the range of $5.1 to $5.8 billion. The street on average was looking for $4.99 billion. So the bottom end of that range, Tim and Bailey, is basically above the average of street estimates.
Okay, so you got to remember that Micron updated its fiscal first quarter late last month. So that's what analysts wanted to see, Romaine. And look, this stock is up, Bailey, more than 60% so far this year. So, read into any moves that we see, especially before the call, with a grain of salt.
Yeah, and we've been seeing it's no NVIDIA, it's no AMD in terms of share performance. One thing to keep an eye on, we did see options still, even with that pre-announcement, implying a north of 4% move. So when you look at this aftermarket move, as you mentioned, ahead of the call, keeping an eye on it, but also look at pure Western Digital right now, up 1.7%.
Yeah, absolutely here. And we talk about, you kind of use this idea that they're not NVIDIA, they don't necessarily have the sexiness of an AMD here, but that's what they want. And they've made that clear that they need to be reckoned with too. They may not necessarily have the sizzle, but they have a lot of the same substance, I think, that NVIDIA and AMD have, or at least they're trying to get it, particularly when it comes to the AI space. And I know the businesses are different in a lot of ways here, but if they can sort of articulate a narrative on that call and really beyond that call, that they are indeed true players in this space, maybe that'll give them the ability to catch up here, Scarlett.
Well, the storyline that they're really pushing right now is higher pricing and how the company is benefiting from that. And one thing that analysts were looking for was the second quarter gross margin forecast. And we do have a number here from Micron. It sees second quarter adjusted gross margin in the 11.5% to 14.5% range. Analysts were looking for a gross margin of 6.4%. So that's also helping support the share price in after-hours trading.
Yeah, worth repeating some of these numbers. Micron's seeing second quarter adjusted loss per share between 21 cents to 35 cents. Estimates were for a loss of per share of 62 cents, Bailey. Shares of Micron moving higher in the after hours after second quarter sales forecast did top estimates, Bailey.
Yeah, we're seeing another thing to call out, Tim, in the numbers, cash flow from operations, 1.4 billion, better than estimates for 1.25 billion. But again, context is everything. This is a stock over the last 12 months up 55%.
Yeah, and I guess it raises the question, though, kind of what the future is. I mean, we know all the hype over the last year regarding AI, and there's a lot of concerns here that maybe that went way too far too fast with the big pull forward, with a lot of companies just kind of experimenting and not really making any money off of it other than the folks who were selling the picks and shovels. So the question is sort of what does 2024 hold for that sector?
I'm going to be watching for any commentary that the CEO gives about China, because we know that China's banned companies from buying Micron chips, and of course Micron is working on making up for the lost market share. The question is how, what is their game plan, what is their strategy, and just any kind of hard numbers in terms of how the Chinese restrictions are impacting their business overall.
I'm looking through the press release, which just crossed the wire. President and CEO Sanjay Mehrotra saying, quote, "We expect our business fundamentals to actually improve throughout 2024 with record industry total addressable market projected for calendar 2025. He calls out the high bandwidth memory for data center AI applications and how that illustrates the strength of Micron's technology and product roadmaps, and argues that they're well positioned to capitalize on the immense opportunities when it comes to AI, and that AI is fueling across our market. So again, another company that's looking to capitalize on the AI interest that we've seen over the last year.
And one more time, the best comparison for this company is Western Digital. WDC right now up 2.2%. So you are seeing some of this read across, everyone wanting to go where AI and chips and kind of the future of technology are going. When you look at this result, pretty strong, and we are seeing that show up in some of those peers.
So when we talk about this idea of, I mean, and I just want to go back to your point, Scarlett, on China, because we've seen some of the issues that NVIDIA has gotten itself into with some of the workarounds, if you will, here. And we know the Biden administration has been pretty forceful. Gina Raimondo has basically said, look, don't do this, or we're going to come after you here. So I kind of wonder what the options are. Either you have that retrenchment, which I don't think is viable for some of these companies, or maybe you do try to test the will of the U.S. government and whether they really will crack down on you.
Yeah, absolutely. And this is something we'll be speaking with really later on. Willie Shih, the professor of management practice over at the Harvard Business School, has done a lot of work on semiconductor companies. And what he points out is that as much as Micron is a U.S.-based company headquartered in Boise, most of their production is overseas in Japan, Taiwan, and China. So this China ban is really impactful.
All right, well, I'm certain that
and most of their sales, I think half their sales are from overseas as well, outside the U.S., I should say.
Yeah, certainly something we're going to hear analysts ask about on the call a little bit later. Hey, that is going to do it for our cross-platform coverage of Beyond the Bell on Bloomberg TV, Bloomberg Radio, and on YouTube. As a reminder, Bloomberg Business Week also available on Bloomberg. By, wow, about 3.6% as we speak right now. The shares have rallied more than 60% so far this year. Worth repeating some of the news. The company maintained its quarterly dividend at 11.5 cents per share. The company is seeing second quarter earnings per share from 35 cents to 21 cents. The consensus was 62 cents per share. Let's get an instant reaction from Dan Morgan. He joins us this afternoon on Skype. Dan, good to have you back with us. He's Senior Portfolio Manager, of course, at Synovus Trust Company. Love it when you join us whenever we have the chip companies report. Micron Technology, you've had 5 minutes to look at the company's results. The shares higher in the after hours before that call takes place. What are your immediate reactions?
Well, Tim, I think overall, obviously, it has to be construed as a very strong beat. I mean, the numbers were kind of moving around on the first quarter. We know they originally came in on sales at $4.4 billion with a plus or minus $200 million. Then they raised their guidance to about 4.7, and then they beat that number at $4.73 billion. That was up 16% on the first quarter. They also guided, as you probably mentioned, going into the second quarter, 5.1 to 5.5 billion in revenues. Street was looking for 4.99. And then on the bottom line, it was a beat across the board in terms of they didn't lose as much money as everybody expected, right? In the first quarter, they only lost 95 cents. And then going in the second quarter, they're looking for a range of a loss of 21 to 35. The Street was looking for a loss of 62. So, you know, just a preliminary look at these numbers, Tim and Bailey, they look very, very strong. And it reiterates and gives further evidence that the rebound that began in the February of 2023 in the chip industry is definitely gaining momentum. We're starting to see that in the memory space.
And with that momentum, what's going to be key in 2024? I'm just looking at the results. AI, obviously, and the spending around that as it relates to data centers is helping. Is that what's going to carry Micron and some of those chip-making peers?
I mean, AI is important for them. Probably not going to see that come to fruition until sometime in the second half of next year. They have two products that they currently are working on. One is called double data rate, DDR. The other one is called high bandwidth memory. Those are chips that go into some of these high-end AI data servers that you would see, let's say, with an NVIDIA chip going in there. That would be the memory that would go into that server with the NVIDIA product. So that's definitely a big demand cycle for them. The other thing, you know, we're seeing, guys, is we're seeing a rebound in PCs, and we're seeing a rebound in regards to smartphones, which is about 31% of the total chip market. So those were two areas that were really hurting. We had auto and industrial that were previously strong, but we're seeing a nice bounce back after we had that big blip on the upside after COVID.
Hey, I'm looking at FAGO on the Bloomberg terminal, and it's got a great breakdown of where Micron's revenue actually comes from. So in the fiscal 2023, about half came from the U.S., half internationally. And then when you break down, Dan, international, this is the point Scarlett was making, you had 17.4% of revenue coming from Taiwan, and you had 14% of that revenue, or 14% of the 49% of revenue, international revenue, coming from mainland China, excluding Hong Kong. What do investors need to understand when it comes to the China story and Micron?
You know, what's interesting is that Micron doesn't have a huge amount of exposure to China. I know that everyone's talking about the restrictions, and that was a big issue that's going to come up on the conference call.
17.5% isn't nothing.
Well, I know, but compared to Qualcomm.
Or 14%, I should say.
Yeah, Qualcomm has almost 60%. That's what I meant when we compare it to other chip companies. But yeah, I mean, that's going to be the real, you know, gorilla in the room as we get into this conference call coming up with the management team. I'm sure the analysts are going to really kind of want to zero in on, you know, how much of impact is that going to have in their ability to kind of continue to replicate some of the success they had in this first quarter in terms of recovery. And, you know, you're right. I mean, you take out a certain chunk of that revenue, that's huge, and that's part of that recovery story. I guess what I was trying to relate it to is when you look at Micron compared to a lot of the other big chip makers, especially Qualcomm, they have a pretty low exposure to China. But you're right, it's still a pretty high amount of their business when you're looking at, you know, 15% plus.
So is it should investors be worried about regulatory risk, about, you know, the U.S. cracking down on those sales?
Well, I mean, it seems like there's regulatory risk now, guys, in all of these chip companies, right? And even Apple. So that's always a risk that's out there. So far, it hasn't really had a dramatic impact. Like, for example, NVIDIA has a couple of their chips that have been banned, and they've been trying to work around it with some chips that meet the specifications in terms of these concerns that China has raised, and they're able to sell in those spaces. So far, I haven't seen dramatic impacts in terms of, bringing down sales and earnings estimates because of the China exposure with the chip players. But it is definitely something that could become a problem down the road, and it could be something that would kind of throw, a stick in the spoke of the wheel here of this great recovery that we're getting in the chip space.
And Dan, I'm just looking at the release and some of the comments from management, basically talking about business fundamentals improving throughout 2024, but already talking about record industry TAM for 2025. Is that at all a concern or surprise to hear and see companies already looking to 25 when we haven't even flipped the calendar to 24?
Well, I think everyone's looking forward to this recovery coming to fruition. And, as you start to move out of the hole that we had in probably about the first quarter of 23, how long is a typical chip cycle? Typically, they don't last that long. So I think you're seeing already people kind of building in that we'll continue to see the recovery through this year as it continues to work into some of these other spaces I mentioned before, like industrial and auto. And then the question is, when does this peak out and we start to go the other way? And, how can we forecast that? And how much carry through will we have? And will China be a catalyst that leads up to this turn again in the cycle? So, again, everyone kind of looking ahead, right? Everybody trades these stocks on what's going to happen 6 months to 12 months down the road.
As if we could know what's going to happen 6 to 12 months down the road, right? I guess that's what
Tim
makes
knows,
a
but
market.
he's just not going to tell us.
What's that?
I said Tim knows, but he's just not
Yeah,
going to tell us.
exactly. That's why I'm doing this, because I can see the future.
Yeah, exactly.
Hey, Dan. To that end, talking about the AI impact here, it's something that the company CEO calls out quite a bit in the press release this afternoon, and I'm wondering where you think we are in terms of value capture from the AI rush, specifically for Micron. Like, how much more room is there to run when it comes to AI?
I think that's a great opportunity for them going forward. I mean, there's been a lot of studies out that have kind of thrown some numbers around. For example, in 23, they expect total DRAM revenues from AI to be about 16%, and then by 2027 to expand to 56%. And then along the way, obviously, you're creeping up in terms of overall revenues being generated from AI. But to me, that's probably the biggest opportunity. I talked about earlier in the conversation about how these chips are paired up with a lot of these NVIDIA AI chips. And, NVIDIA continues to do extremely well. AMD's got some new AI products coming out. So I think that's going to be the greatest opportunity going forward, just because you guys know that the memory market is extremely cyclical. It's a very commoditized industry. They have to compete against Samsung and Atmel and all these other players in the space. So it's a tough sled. So how do you carve out an opportunity for growth for yourself? And that is to align yourself with some of these AI chip makers and continue to garner a larger share of that overall AI memory space. And it's obviously going to be a huge growth component within memory, which is huge, right? Takes away some of the cyclicality that we typically have in PCs and servers and smartphones and the other things that are out there that obviously create this up and down cycle in memory.
Yeah, Dan, we only have about 30 seconds left, but looking at the charts, NVIDIA up more than 200%, AMD 110, Broadcom had doubled so far year to date before pulling back a bit. What stocks do you like within the semi space?
Well, you mentioned a lot of them. I mean, obviously NVIDIA is a holding of ours. Qualcomm, they have the A100 chip that should go into smartphones. We like Broadcom. They reported a couple weeks ago. They had a pretty good report. They mentioned some of the strength they're getting in their Jericho 3. Which is their AI offering in terms of growth. So those would be some of the names, that we've been kind of focusing on. TI's in there too, but they've been a little bit underwater with the auto industrial space being so weak. But those would be some top names that you just mentioned that we're currently on our buy list.
Dan, we love it when you join us. Usually it's on days when chip companies report earnings, and that's been quite a bit recently. Really appreciate it. Dan Morgan, Senior Portfolio Manager at Synovus Trust Company, joining us on the phone from Atlanta. This is Bloomberg Business Week.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, Micron higher, and this update is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glenmead.com to learn more. Micron Technology shares higher after hours. Micron now up by 4.6%. The largest American maker of computer memory semiconductors gave a strong revenue forecast for the current period, indicating that data center demand helped make up for sluggish orders from PC and smartphone customers. Dan Morgan is Senior Portfolio Manager at Synovus Trust. He's been sifting through the numbers. He spoke with us moments ago right here on Bloomberg Markets.
And it reiterates and gives further evidence that the rebound that began in the February of 2023 in the chip industry is definitely gaining momentum. We're starting to see that in the memory space.
And again, Micron up after hours by roughly 4.5%. Warner Brothers is in talks to merge with Paramount Global. This according to Axios, which says David Zaslav, the CEO of Warner Brothers Discovery, met with Bob Bakish, his counterpart at Paramount Global today in New York to discuss a possible merger. Stocks declined today. High-flying stocks reverse course midday after Wall Street warned of a pullback on the rally sparked by the Federal Reserve's pivot last week. Today we had the S&P down 70, drop there of 1.5%. The Dow down 475, retreating from a record, down 1.3%. Nasdaq Composite Index down 225, down 1.5%. 10-year yield 3.85%. The 2-year 4.34%. Spot gold down 50 cents the ounce to 2,030, while West Texas Intermediate crude today little change, 73.81 a barrel, down by 0.2%. Again, better than expected numbers out of Micron. Stock after hours surging by 4.6%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Check out the new Bloomberg Business app. It features Apple CarPlay and Android Auto. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs at any time. All you got to do is download the Bloomberg Business app on your smartphone and then connect your phone to your car. It's free in the Apple App Store or on Google Play. Thanks to our sponsor, Interactive Brokers.
Yeah, Tim, as worries around the pandemic faded, consumers took to the skies with airline traffic more than doubling its COVID-era bottom as the travel industry for business storms back, while the jump in travel to see Taylor Swift or Beyonce dominated headlines. I don't know if you made a trip out to see some of those cities, but those cities benefited vastly from those concerts. Calendar for conferences, though, and conventions are now packed. Next month, we have CES in Las Vegas, JP Morgan Healthcare Conference in San Francisco. Flick ahead to March, you have South by Southwest taking over Austin. As meetings and exhibitions bring in millions for host cities, better diversity and equality at these events is something that's critical for them. That's why we're talking with Jason Dunn. He's the CEO at National Coalition of Black Meeting Professionals, joining us now on Zoom from Cincinnati. Jason, your organization is an advocacy group that promotes the positive financial impact of travelers of color. How does your organization work to improve the diversity of these meetings, and what can that do for the events as well as the cities hosting them?
Well, I appreciate that, and thanks for having me. Well, two things. One is our organization was created 40 years ago this year, and the focus was always to empower, educate, and influence policy of Black professionals, owner hospitality, and Black travelers. And what that means is that we gave the value of what conventions and Black leisure travelers give internationally and domestic, and that number is $129 billion. And so our founders were frankly around the table and said, how do we benefit this, and what do we do to make sure that cities who are diverse, cities who are progressive, cities who are in tune with the changes of the demographics gain or earn these dollars. And we understand that the $129 billion that we bring to destinations also are recycled and also influence jobs, influence policy, in addition to the quality of life and retaining talent and bringing corporations to destinations who believe in diversity. And that's what we've been talking about. That's what we've been doing for 40 years, and we've been successful this far.
Jason, where are some of the target cities that your organization has its eyes on? I mean, where are the cities that are doing a good job of this? And maybe the targets aren't necessarily cities that are doing a good job, but that could be doing a better job.
Well, I think it's a couple of things. One is there are cities who have done great over the past years. There's your regular metropolitan cities like New Orleans, Detroit, Washington, D.C., Atlanta, Cincinnati to some extent, and Cleveland and places like that. But also there are cities who are evolving, who understand that in order to retain diverse talent, in order to retain or gain corporations, and in order to help with the commerce of a destination, that they have to be more diverse. And we're seeing people, cities like Austin, Texas, who has welcomed Black Tech Week, and Black organizations who are in technology went there as well. And cities like Orlando or Miami, who are recognizing the international flair that our organizations bring and our leisure travelers bring as well.
And Jason, you joined NCBMP in November last year from Visit Cincinnati. What changes have you been able to implement in that 13-month stretch, and what does 2024 look like?
Yeah, I appreciate that. So I think for us, we have been more excited about widening our base. So it's not just conventions and meetings, but also sports. many of our members are in sports and have, in fact, one of our members have the largest kickball tournament in the country. I laughed too when I really got the data about that too. So I'm like, wow, really? And
I've
so,
never been to a
I know.
kickball.
Now I
Have you
want to.
been?
I want to be part of that.
I thought you were
Sounds
going
fun.
to, Jason. I thought you were going to talk about Cincinnati FC. I mean,
no, I
what
mean,
a season!
They're
What a
great
season
too.
you guys had.
Hey, listen, go. Hey, I'm with them as well. But we're talking about the members, and the members are vast and wide, and many of our associations and organizations are in every single market. Again, not just conventions, but also the sports and entertainment. And you referenced Beyonce, so Beyonce would not go to destinations whom are not welcoming. And so those are the things that we kind of in the background have advocated for, and saying that if you want these dollars, you have to show diversity. One, and two, you have to be welcome and being a progressive site. And so we've done that and doing that consistently. In 2024, we're focused on building that bridge internationally. We know that that Asia and Africa specifically are destinations for our members who want to create that international flair. And we know that as the country and the world is more global, we have to be in those discussions and meeting and understanding what's around the world. And that's what we're doing now in 2024.
And Jason, you mentioned Black U.S. leisure travelers spent nearly $130 billion on domestic and international travel. That was back in 2019. How is that evolving since the pandemic, and what factors are playing into how travelers are selecting their destinations?
Yeah, so I thanks for that. So again, welcoming policies, one, two, people are frankly being more stingy with their time and more strategic in where they're going. And so I believe that, and also travel has eased up as it relates to prices. So it's not as expensive to travel as it was before. So people are taking purposeful destination trips, and conventions are going to places where they want to grow. And so, to be relevant, you have to have a global kind of conversation, a global interest, and then many of our associations are looking at the world, not just the nation. And so I think as we begin to broaden our scope, we talk about what those interests are. We talk about how tourism ties to development, how tourism ties to jobs, and how tourism ties to economic sustainability for destinations. Everybody's aligned with that. And so people are being stingy with what they're talking about. They're being stingy with where they're spending their money, and they're purposeful on where they're going and how it aligns with their personal values. And so that's what we've seen in the past couple of years since 2019, since the study was happening.
Well, have conferences completely recovered since the pandemic? Because there was this big concern for airlines that, business travelers who pay more because they buy tickets at the front of the plane, and they buy tickets during the week, and they buy tickets, only a few days ahead of time, so they spend more money with airlines. There was a concern that people were going to be using Zoom and Google Meet and Teams or whatever for meetings instead of going to these conferences. Are you seeing that, or have conferences overall completely recovered and then some since the pandemic?
Yeah, so I would say in different segments, we see recovery. Our particular markets are recession-proof. And so what that means is that we're going to meet because our organizations are steeped in tied to social justice, tied to economic development.
Recession-proof, but not necessarily pandemic-proof.
You're correct.
Because I'm not talking about recession. I'm talking about, just a change in habits post-pandemic with people not traveling as much.
Yeah, no, you're correct. So what I was getting to was that there's a balance. So each organization had to shift. And so, yes, there is the virtual piece, which is more convenient for people to move back and forth, but also it forces conventions to be more purposeful on why they meet and what they're offering people when they come. And so the numbers, yes, have come back, but we've seen growth in several categories as it relates to larger conventions versus international, national versus domestic. And so those things have balanced out over time. But yes, we see a positive trend that conventions are coming back. Yes, the people are, the hybrid meetings have been more welcoming than they were before. And then there's a balance on content that brings people to conventions versus why they've been in the past. So I think it's very purposeful, and people are intentional about why they travel, where they're going, and who they're going to meet.
All right, Jason, we only have about 20 seconds left. Convention or event you're looking forward to in 24?
Look, so our 41st convention is what I'm looking forward to in Birmingham, Alabama. We just had our 40th. And so we want to continue the momentum. There's a lot of policy things happening right now, particularly in Florida, that we're going to be tackling as the election comes around in 2024, and how we're leveraging our...
Oh, looks like we lost Jason Dunn, but we were running out of time anyway.
Our
Really do
associations have power
appreciate
to influence policy and those around us. So,
Jason. We got to leave it there. Jason Dunn is Chief Executive Officer at the National Coalition of Black Meeting Professionals, joining us on Zoom from Cincinnati, Ohio. Hey, let's get a check now on the latest world and national news. For that, we go all the way to Washington, D.C., where we got Scott Carr in the Bloomberg 99.1 newsroom. Hey, Scott.
Hey there. The U.S. is engaging in a prisoner swap with Venezuela. The Biden administration's now agreed to release a close ally of Venezuelan President Nicolas Maduro in exchange for 10 Americans who were reportedly released today. State Department officials say 6 of the Americans were being wrongfully detained. American voters are divided if the presidential election were to come to President Biden and former President Trump. Quinnipiac pollster Tim Malloy says it's a virtual dead heat, with Biden receiving 47% of support from registered voters and Trump receiving 46%. Malloy points out there's always a ways to go before the election next year.
I mean, there's court cases. Both the two leading candidates are older men. You've got Nikki Haley rising. The world is on fire. There's 2 wars on 2 fronts.
Though in a 3-party race, independent candidate Robert F. Kennedy Jr. received 16%, drawing support from both Biden and Trump.
Any of the polling we've done has shown that Americans would like another alternative to Biden and Trump. He may be it, he may not be, but he's showing up with a good number.
Kennedy, who switched from a Democrat to an independent in October, does not neatly align with either party's ideology. He's called for closing the U.S.-Mexico border. Also describes himself as pro-union, but also pro-environment. Alabama Senator Tommy Tuberville's hold on military promotions is officially over, the Senate confirming 11 top military nominees yesterday after Tuberville agreed to end his blockade following pressure from his own party. The Alabama Republican had blocked all military promotions since February in protest of the Pentagon's abortion policy, which allows service members to travel reimbursement for abortion care. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Scott Carr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Micron Technology shares, they're up now by 4.9%. The largest American maker of computer memory semiconductors gave a strong revenue forecast for the current period, indicating that data center demand helped make up for sluggish orders from PC and smartphone customers. Again, after hours, we do have Micron up by just about 5%. Warner Brothers said to be in talks to merge with Paramount Global. This according to Axios, which says David Zaslav, the CEO of Warner Brothers Discovery, met with Bob Bakish, his counterpart at Paramount Global today in New York to discuss a possible merger. Not just a down day, but a lot of air came out of this high-flying market today. The Dow, the S&P, NASDAQ all ending in the red. Midday sell-off here only got worse ahead of the closing bell. The Dow down 70 points, a drop today of 1.5%. The Dow Jones Industrial Average down 475, decline there of 1.3%. NASDAQ Composite Index down 225, drop there of 1.5%. NASDAQ 100 Index pulling back from a record, down today by 1.5%. 10-year yield 3.84%, with a 2-year yielding 4.33%. Alan Zafran is founding partner and co-CEO at IEQ Capital, and right here on Bloomberg Business Week, he told us he sees reason for caution.
I would tell you we remain a bit guarded or cautious. If you look, the entirety of the move is based on the fact that the Fed is going to be cutting rates next year, and what's different is the Fed has told you they're going to cut rates 3 times 25 basis points each. The market's built in an expectation they're going to cut rates 6 times by 1.5%. That might be a little bit too ahead of itself.
And you can hear more of that conversation on the Bloomberg Business Week podcast. 10-year yield again 3.85%. Spot gold down $12 the ounce to $20.28, a drop there of just about 0.6%. Bitcoin up 2.5%, 43,541 on Bitcoin. West Texas Intermediate crude down 0.2%, 73.76 a barrel. Again, recapping, Micron surging almost 5% after earnings after hours. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, exactly 3 years ago tomorrow, Tesla finally started trading in the S&P 500 index. Since then, the company's shareholders have been on a wild ride that's left them wondering if they should have just put their money in the broad equities benchmark, so maybe an S&P 500 index fund. Hindsight, as they say, is 20/20, but the answer of whether or not they should have put their money into a broad equities benchmark, if they held on to it until today, is a resounding yes, because the S&P 500 has outperformed Tesla over this time. Tesla shares are up about 11% since then. Meanwhile, the S&P 500 has climbed about 28%. So we're talking real discrepancy there. Eric Weiner is Equities America's team leader here at Bloomberg News. He joins us in the Bloomberg Interactive Brokers studio. These stories are always fun because it's about perfect timing, which nobody actually has. But the fact that Tesla's up 11% in the last 3 years versus the S&P 500, it really masks some of the bigger moves that we've seen from Tesla over this period of time.
Well, absolutely. I mean, if you look at the S&P 500 and entering into it, there are usually 2 moments where you get the bounce. The first is during the speculative period when you're about to join or you're announced that you're going to join and everybody piles in.
Because they say, okay, well, more money is going to go into Tesla because people are going to buy into the index and the index has to buy the stock.
Exactly. Well, every ETF, every fund that tracks it has to own this thing. So if you look at Tesla from the start of 2020, it's up like 800%. So, yeah, it's up a crazy amount. So it got this wild run up into entering the S&P 500. But then you usually get this second bounce, which is when you enter the index, and that usually is a more gradual thing, where over time the ETFs start buying it, SPY starts buying it, and there's this buying pressure. Nobody cannot own this thing. And what you're seeing now is that the stock actually underperformed the index over that particular time. It got a quick jump and then fell off. And really, it's been this year. So the thinking among traders is that, and today it actually got worse. So now it's literally about $15 from where it was 3 years ago tomorrow. So tomorrow it'll start trading about 7% above. So if you bought it thinking, wow, it's now in the S&P 500, it's going to go nuts, you didn't get that return. But when you think about where Tesla is and the issues facing it, it's not a normal S&P 500 stock. I mean, Uber got this big bump when it joined. Blackstone got this big bump when it joined. Tesla, like if you look at it starting this year, it decouples from all of big tech. And so big tech starts going up, and the Magnificent Seven, or what you ever want to call them, they all take over the stock market, and Tesla keeps going down. And that's specific to Musk's risks and then the EV industry itself. So the company and the stock had gotten so big, it was already, by the time it entered the S&P 500, it was arguably one of the most important stocks in the market. So it may not have been one of these stocks that was going to get the bounce.
Well, that's what I was going to ask, Eric. It comes in at $659 billion market value. It only swapped places with Berkshire. So in terms of the size, is that just a kind of a factor when you look at the performance versus the S&P 500 where you missed out on pretty much the entire boat before it was added?
That's sort of what happened. I mean, if you think about the companies that normally join, they're less mature, if you will. So when you're looking at a company that's this big, it probably was late coming into the S&P 500. So it was probably already being valued as if it was there. And then when you have this high valuation, there are all these other risks that go into it. You're not just thinking, wow, everybody who owns SPY has to own this thing, because everybody already owns the thing. So it's, the market cap is so large, you can't ignore it. So it becomes more of a fundamental play. And I think that Musk's risks really became the issue this year, and that took the stock down.
Well, because I remember back in 2019 talking to PMs, and they were like, oh, Tesla's a way to generate alpha because we're benchmarked against the S&P, so if we just sprinkle in a little Tesla, that's how we outperform. How does that factor into performance when these guys have to outperform their benchmarks?
Well, so what you did was you got out of Tesla this year. As soon as you saw that risk showing up, you piled into Apple, you piled into Microsoft, you piled into Amazon, you piled into the stocks that were going up, those Magnificent Sevens, and they're all going up, and you're chasing momentum. What you're talking about is, following the market up. But if you're going to do that, you avoid what's going down. And as soon as you see the trajectory of Tesla, which really starts falling off very early in the year, it's a different story, and you have to walk away from it.
Okay, so let's think about what you said when it comes to Tesla already having this run up before it went into the S&P 500. Was that just a function of the sort of like rules around a stock entering the S&P 500 and how people were such fans of Tesla before it even pulled, X number of consecutive quarters where it showed a profit?
I think it was a big belief in the company. I think it was like if you look at
it's so different than other companies because you have Elon Musk and because you have this like rabid fan base.
And you also have the software. It's more than just an EV maker. And if you look at the beginning of this year, demand for EVs seemed insatiable, and it was never going to fall off. And we're going to build charging stations all over the country, and all of that's going on. And you look 12 months later, and people are starting to question the logic of that. They're starting to question how fast that'll come on. And so suddenly, the idea is like, actually, there's a whole heck of a lot of risk in Tesla, and the valuation is really high. We can probably get more bang for our buck from other tech stocks.
Yeah, I mean, just looking at it again, I want to, over that same stretch, comp it to Apple. Apple's returning 57%. So even that company basically doubling the returns for the S&P and the NASDAQ 100.
Okay, we got 30 seconds left, Eric. What does 2024 look like if you look into the crystal ball?
For Tesla or for the stock market?
For
Tesla, I think it's more risk. I mean, until you see, first of all, there's Musk. And second of all, until you see demand for EVs picking up, there isn't much really to back that stock in terms of revenues and then earnings.
Yeah, it's pretty wild what we've been seeing from the likes of Ford and GM when it comes to way they're slashing investments in EV production and in batteries and battery manufacturing facilities. Such a difference than what we saw from a couple of years ago.
Yeah, and at the start of this year, that was the play, and now it's not. We're entering 2024.
Eric Weiner, Equities America's team leader here at Bloomberg News, with us talking Tesla and the equity market here in the Bloomberg Interactive Broker Studio. This is Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Micron Technology shares pushing higher after hours, up now by 4.8%. The largest American maker of computer memory semiconductors delivered a strong revenue forecast for the current period, indicating that data center demand helped make up for sluggish orders from PC and smartphone customers. Warner Brothers is in talks to merge with Paramount Global. This according to Axios, which says David Zaslav, the CEO of Warner Brothers Discovery, met with Bob Bakish, his counterpart at Paramount Global, today in New York to discuss a possible merger. Apple is heading for a $4 trillion valuation despite China concerns and issues with the Apple Watch. This is according to Dan Ives, senior equity analyst at Wedbush Securities, who was interviewed this morning on Surveillance.
What's starting to happen is that if you look at the services piece and you look at the penetration, the average Apple customer is still 20 to 25% penetrated from a services perspective. That's going to continue to up. And then I believe the big thing here is the AI app store that I think they introduce over the next year. That's going to be the new shiny object.
Ives, by the way, has an outperform rating on the stock, along with a $250 price target. Today, Apple shares are at $194.83. Apple today lower by 1.1%. After earnings, FedEx shares plunged today. The earnings report exposed weakness of the company's express air business. Today, we had FedEx down by 12%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenevec and Bailey Lipschultz in for Carol Masser this afternoon. Let's get a check down on the latest world and national news. For that, we go to Scott Carr in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Scott.
Thanks so much. Former President Trump is criticizing the Colorado Supreme Court's decision to keep him off that state's 2024 presidential ballot. The Colorado Supreme Court said Tuesday Trump violated the 14th Amendment's insurrectionist ban when he encouraged those who attacked the U.S. Capitol in January of 2021. In Wisconsin today, President Biden said as to whether Trump actually violated the 14th Amendment, he'll let the courts make that decision. But he said there's no doubt in his mind Trump encouraged the attack on the Capitol that ended up taking the lives of 5 people.
You saw it all. Now, whether the 14th Amendment applies, we'll let the court make that decision. But he certainly supported an insurrection. There's no question about it. None. Zero. And he seems to be doubling down on about everything.
Trump called the decision in Colorado flawed. He says he plans to swiftly file an appeal. If next year's presidential election comes down to Biden and Trump, a new Quinnipiac poll puts them in a statistical dead heat, showing in a head-to-head matchup, 47% of respondents supported President Biden, while 46% supported Trump. The poll shows that if you add anti-vaxxer candidate, Democrat Robert F. Kennedy Jr., he pulls support from both Biden and Trump. The son of the well-known former U.S. Senator and Attorney General drew support from 22% of respondents. The FTC is proposing new online privacy measures for kids. The changes look to strengthen the Children's Online Privacy Protection Act of 1998, which restricted online tracking for minors on the internet by social media apps, advertisers, video games, and retailers. Regulators say the new rules would shift the burden of safety online from parents to those apps and digital services. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Scott Carr, and this is Bloomberg. Back to you.
Thank you so much for that update, Scott. Really do appreciate it. Hey, Bailey, I wanted to get readers and viewers and listeners' attention. Well, readers have certainly been reading this because it's among the most read on the Bloomberg terminal. We talked a lot over the last few years about this war for talent, and we've certainly seen the labor market soften a little bit. We see that in the monthly jobs reports. We also see that when we speak to people who work at some of these recruiters, these big platforms that say, you know, the worker's not in the driver's seat anymore. Here's something interesting, though. We're actually seeing something different play out when it comes to the airline industry. Our own Matthew Boyle, who covers the workplace, and Mary Schlangenstein, who covers airlines, out with a story that talks about pilots from smaller carriers are applying for jobs at Southwest Airlines, and then they're leaving months later to work for bigger rivals. It's the latest salvo in the U.S. aviation industry's war for talent.
Yeah, the company's chief operating officer called it resume washing, Tim. So I guess a way to sidestep some of the policies, according to him, at larger U.S. carriers put in place to protect staff is that you take a job at a smaller airline, build enough hours, then go ahead and apply through agreements with other carriers. One thing that's interesting at this company that this story looks at and kind of looks at is the fact that airlines have been frustrated to see major carriers use six-figure bonuses to lure pilots from cargo carriers like UPS and FedEx. So maybe the bigger money apparently is with airlines like Delta or United.
Yeah, there was a sign in one of the airports that I was in over the last few months. I believe it was the Cincinnati airport that talked about a $100,000 or $200,000 bonus that went to pilots who would come and fly for these regional carriers. One thing that's interesting with regional carriers, because I have a small kid, whenever we fly, he wants to go and sit in the cockpit and talk to the pilots and stuff.
Does he get wings?
He gets wings. Well,
Awesome.
so that's the story. So the pilot that we were talking to, I think we were flying American. The pilot reached into his pocket and pulled out some wings, and they were Delta wings. Oh, no. And I was like, "Why are you giving us Delta wings if we're flying American?" And he was like, "Oh, I actually fly for all three carriers because it's a regional airline." And they contract with all the carriers, and he doesn't even know at the time who he's flying for, because in the same day he could be flying for other carriers.
He's got wings for all of them in his
He
pocket.
does. He's got all the wings. Hey, check out this story and more among the most read on the Bloomberg terminal this afternoon. Also, of course, available at Bloomberg.com. It's Business Week.